Hi everyone, it is Sunday the 24th of May 2020 and I'm going to be having a look at the currency markets here. I'll start off with the US dollar basket. So this is still ranging, very much as was my expectation. Most of the last week it's still circling that 100 level. And of course it wouldn't take much. It would only take like 2 or 3 really good days of movement to break it out either side. But for now, I don't have much expectation to see it do anything differently. If I look at it on a weekly basis here and I look at the 50, the 20 and the 10 simple moving averages, I can still see that the medium term and shorter term averages, or the flow of price, is still drifting to the upside. And so this implies that over the coming couple of months, we'll see it push over the line and keep going. And that means that it just kind of, for now, it means that I'm leaning slightly more towards a stronger dollar until I see a significant break to the downside. Okay, so it's either ranging and then slowly but surely just drifting over the line. So this week, I think it's reasonable to expect it to break above the 100 level and to keep pushing back up towards the 101 level. Looking at euro dollar, also range bound. All right, so also range bound, strong level of support within a strong level of resistance there at 1.1. And price effectively drifting. So if the US dollar does strengthen, it makes sense that reasonably within this range bound that euro dollar will weaken and head down towards that 1.08 level. Looking at cable, so cable slightly weakened. Actually, there was a somewhat decent trade setup here where price broke through historical level of support and came back and retested it. It hasn't really committed fully yet, but it does very much look as though it's going to follow through for now and continue to head low. If I look at it within a weekly basis, nice long downtrend, pull back into the moving averages and starting to head lower. So there'll be some resistance at the 1.2 level, and then we'll see if it heads a little bit lower from that. So it's almost there. So I think it's reasonable again this week to expect this to head down towards 1.2 to test that level. Aussie dollar, again, I've been waiting for a while for this to turn around at this point, and it continues to maintain that bullishness. And in fact, at this point in time, there's no signs that that's really going to change so much. There is a nice level of resistance. It's broken through that, potentially going to find some support. Again, if it just falls through that and then breaks the lows here, then I'll be leaning again for this. I'll be leaning towards that heading lower, and of course that implies a you see, the interesting thing here, sorry, I'll come back and finish that sentence in a moment, is the strong rejection of these historical lows and price coming back up into the moving averages here. It's a really good area. If it does ultimately intend to maintain this longer term drift to the downside, this is a good area for it to turn around in. And so I'm still going to be watching out for that. I'm leaning more to the downside, although it is uptrending technically. My approach on trading this would be much more aggressive, with the expectation that moves to the upside will be shorter and less sustained, because price is going to, over the coming weeks, going to head a little bit lower at this point in time. QB dollar will be similar. It's range bound. You can see it's also very much range bound here, and you can see on the weekly that's 1, 2, 3, 4, 5, 6, 7, 8 weeks, give or take, roughly in that area. So that's been a while, so we can see just generally range bound behavior, almost certainly the same with dollar yen. Small drift to the downside and then back up here. And again, that's not a surprise. All right, it's been dollar yen has been range bound going back to 2015, 2016, and no real difference there. So it'll pretty much stay between those areas for now, even though there is a slight drift to the downside. My expectation with this is, again, as always, shorter term trades, not looking for much happening there. Dollar Swissy, again, also very much range bound. It makes sense. We've got the dollar itself as range bound, and therefore that implies that it is range bound. It's weighted range bound amongst its major trading partners. So that's the case. Not really seeing any trading opportunities here. So certainly there are some charts that I will just be staying away from until they break outside of these ranges. And dollar Swissy, that just means there is not a single money making opportunity this coming week on that, or at least high probability, lower risk, statistically cash opportunities. Just not a big fan of those. Dollar CAD also range bound. I didn't frame it. I didn't put any levels in here, but it's also range bound here as well. After its breakout of that 1.36 level, it's effectively same thing, 6, 7, 8 weeks consolidating sideways. And although I'd really like to see this continue, it can actually legitimately come back down and test this level of resistance before taking another run up to that level. So right now it's smack bang in the middle, and if anything, it actually looks as though it might potentially head lower before heading higher. So again, range bound, I need to see it break solidly below that level of support at that 1.3850 level, or break out and start heading back up above that 1.4 call it 1.420 level. Looking to see that head higher. So range bound, you can just see that pattern of consistent range bound. Really the only pairs, dollar Swissy, dollar yen, are generally, as a guide, over the last couple of years have not been fantastic trenders. Dollar Swissy earlier this year is starting to drift back in with some of the other pairs, but against US dollar, not so much. So, and dollar yen, again, I see JPY and CHF trading opportunities with crosses, but not so much with the US dollar. For now, as well as dollar CAD, they're just not that great. We used to get some really, really good trends. We don't seem to be, and there doesn't seem to be any reason for that to change any time. But at the same time, or at least in contrast to that, GBP, Aussie and Kiwi do seem to be able to produce some trends. So those are the ones I'll be focusing on in terms of the majors against the US dollar. And then I'll have a look at some of the other crosses. The only one that so far looks interesting to me, I think it was Aussie yen. Really nice breakout to the upside, potentially finding some support. But again, that longer term trend is very much to the downside. It's in that area. So a lot of these charts have got longer term downtrends and we've got shorter term uptrends, and so there's that conflict and increased risk on taking those trades to the upside. That's it pretty much on currencies for me for this week.